Hello and good afternoon to everyone that is currently tuned in live with us on another episode of Phillip Trading Podcast. I'm your host for today and my name is Yongxian. With me here today, we have Jeen Hao, the founder and chief master trainer of Street Finance. So hi Jeen Hao, how are you doing today?
Hi, Yongshen. I'm good.
Great. Okay,
Yeah.
so for today's podcast, we will be discussing about what are the behaviors in investing and trading. So from here, we will understand more about the risk-reward ratio and also the winning rate and how to take the corrective action one step at a time. And also what are the most profitable combination and how are the traders able to get there. So once again, I would like to help all of our beloved audience today to share this video to all of your friends. The more people that are watching this video, the more we are motivated to deliver greater content to all of you. And without further ado, let's jump into our topic for today. So my first question to you, Jeen Hao, can you tell me more about the types of behavior in investing and trading?
Okay, so everyone has probably heard about this. There are four kinds of results in trading and investing. So the first one is small win, second is small loss, third one is big win, and the fourth one is big loss. So these are the four typical results that we get from all transactions or trades. Well, in practical, there might be other types, which is a break-even or a near break-even trade. Now, and of course, the drill is always avoid the last outcome, which is big loss. So big loss is not what we want in our result. So if we dive deeper, we can talk about the four types of behavior in the market. And it is being identified by the person's response towards, gain and loss. When it comes to gain, some people tend to first either they sell when they have like little profit, and second type would be people who hold longer and let profit run to like double digits or even multi-baggers. And when it comes to loss, which is the part of investing and trading, now some people will sell very quickly and cut the loss very quickly, very disciplinedly, which result in smaller loss in general. And also people who hold on losses, okay, maybe they have their own strong opinions and things like that, which, sometimes result in big loss. Now, so with these, we can get four types of behavior or four types of combination. The first, people who take profit fast and hold on losses. The second would be people who take profit and cut loss both very quickly. And the third one will be people who let profit run, but they also hold on with big losses. So these people tend not to sell. Okay. So the fourth one is people who cut losses rather quickly and they know how to let profit run. And, among these four types, the first type is the typical type of retailers who always hold on losses. Okay. Maybe they have their strong opinion on stocks and let the losses eventually, sometimes just grow bigger and bigger. And they quickly sell when they see profit because they are afraid that they will lose the gain, put it this way. All right. So in risk reward manner, this is what we call high risk, low return. Okay. Or what we call a bad risk reward ratio. Now, the second and the third type are often, on a risk reward perspective, they are, kind of like similar level. The risk reward is like close to 1-to-1. Okay. You risk one to make one. And the last type will be theoretically the best, by which you get great risk reward ratio, or what we call win big and lose small.
Okay. And just like you mentioned about risk reward ratio. So why do you think that it is very important?
So risk reward ratio is something that I think especially traders, okay, we need to take good care of our risk reward ratio. So when you have a bad risk reward ratio, meaning that you take a lot of risk to make little profit. So put it in another words would be huge loss, small gain. Sometimes might be, unintentionally. Okay, like people who tend to trade like, I don't know, maybe like penny stocks or those like 10-cent stocks. They tend to, okay, theoretically you can risk 2 cents to make 2 cents. But when the stock dropped by 2 cents, which is practically 20%, when you go and execute the stop loss, you might sell one bit lower. So you might sell at 7 cents or 7.5 cents, which eventually increase the risk part, the loss part. So eventually you want to risk 20%, but in reality, in practical, you lose 25%, put it that way. And when you take profit, if you use market order to take, you know that you always lose one bit. So your profit is always smaller than what you have quote unquote predetermined. So sometimes it's not behavioral or intentional. Sometimes it's because the way some people trade, like the stock selection, it makes them, the risk reward is off a little bit. But sometimes it's also a person's behavior whereby they tend to, hold on when the stock is losing money. Okay, they hope that one day it will go up. So they have the kind of mentality: if I don't sell, I don't lose. Then eventually things get worse and devastating. And because these people don't see a lot of gains in their life, so they tend to be like, when the stock grow by 5%, say, wow, 5% is good, 5% in 1 month. Now FD only 1 year, 2%. We cannot be greedy. We sell. Okay. So there are people who like this, but in risk reward manner, this is a bad risk reward. Okay. And in contrast, okay, if you have a great risk reward ratio, is everything opposite. So what's really important here is when you have big loss and small gain, you need a lot of gains to cover your loss. I think this one is very intuitively understandable. If I put it into a more practical or professional way, it means that people who have huge loss and small gain, you will need a high winning rate to stay profitable. In contrast, if you have great risk reward ratio, you don't have to rely on high win rate to be profitable, because one win can allow you to take like 3 or 4 stop loss before you are back to square one. So we all know that the winning rate can change depending on the market situation. Like the current market right now, we really cannot beg for super great high win rate. So being able to have great risk reward ratio from our strategy can be the first step, because at first you don't rely on winning rate, because this is something that is even tougher to control than risk reward. So this is the reason why risk reward, in my opinion, is very important, because great risk reward ratio does not allow, great risk reward ratio does not let us rely on too much on winning rate. So if the market becomes great again, our winning rate improves tremendously. That's when we will have much more profit than usual.
Okay. So you've been sharing about risk reward ratio. I think the audience are very keen to know that what can they actually do to improve the risk reward ratio while investing.
Okay, so just now we discussed about the 4 types of behavior, right? So if you are the second and third type of behavior, you are one step away from a better risk reward ratio. So if you tend to take profit and cut losses quickly, okay, like 3%, 5%, you take profit. Okay, 3%, 5% loss, you also take the loss. Then what you will need to do is you try to learn some strategy to let profit run, meaning that you hold slightly longer than usual if you have a winning trade. Maybe, okay, when the stock go up, instead of taking all the profits, you take half first. Then the rest, you let the profit run and you set what we call trailing stop. This is just one of the ways. Okay, this is just one of the ways. Sometimes there are also another way of people like to do it is you sell until you get back your sort of like cost, and then you let the rest run. But depending on strategies, okay, different things may work better than another. So the key here is learn how to let profit run if you tend to take profit and cut loss very quickly. Now, if you tend to hold on losses and gain, meaning that a stock drop 20%, 30%, you can hold, okay? And then when the stock go up, you can also hold 20, 30, 50%. then maybe what you want to learn is how to cut loss quicker, or maybe if you're an investor, perhaps you want to learn how to reduce the loss by maybe learning some ways to do better quote unquote timing, although I don't like to use that word, okay, but to buy lower so that you don't risk much. Okay, those are for investors. And of course, you have a trader, we talk about cutting losses and things like that quicker. So these two types, it is once you're one step away from being the fourth type of people whereby they have small loss and huge win. But for the first type of people who hold on losses and take profit very fast, okay, you have to fix both side of the equation, meaning that the big loss you have to transform into small loss, and the small win you have to transform into big wins. So for these type of people, they would have to take one corrective action at a time. So usually I would say it would be better, instead of holding on losses, learn how to cut loss quickly first, because I think this is the toughest part to learn, as opposed to holding gains for most people. I'm not saying everyone, but for most people. So once you learn how to cut losses quickly, and of course, when you cut a lot of losses, you somehow will also know that whether or not your stock selection metrics or what can be refined and things like that. And after that, you learn how to hold on winning trades. So for first half of people, there's some heavy lifting to be done. You have to take things, one step at a time, one corrective action at a time to get great risk reward ratio.
Okay.
That's
So
basically
based on
how
your
it can be done.
okay. So based on your sharing, what are the best combination? The best combination is big win and small loss. So how can we get there, and what is the strategy?
Okay, so there are many ways to achieve big win, small loss. Okay, if you're an investor, there are many ways of doing that. Like they don't depend on fundamentals and a lot of like valuation metrics and things like that. I would say the key here is you would be able to cut loss or take loss quickly. That's the first requirement. And the next thing is probably, okay, based on speaking from my experience, because I'm a trend follower, okay, as far as stock trading is concerned. So the first thing is cut losses faster when things are not right, when you see that things are not correct. Because if anything devastating were to happen, then you are safe. But if anything were to rebound, like people like to say, if I cut loss now, what if the stock rebound? The thing is, we can always buy them back. But if you cut the loss, or if you don't cut the loss, put it this way, if you don't cut the loss and the stock continue to go down, then the corrective action to save the trade is painful. Okay, so the first thing would be cut losses quickly. The second thing would be learn how to ride big trends or let profit run. And personally, I use trailing stop to help me in trailing the gain and avoiding me to exit profitable stocks too fast. Like sometimes we really cannot uh, uh, put an expectation on how high a stock want to go. It's like last time, Top Glove. Nobody expect it can go to like 20, 30 bucks when it was just $6. Everybody think that it will just go to like 10, 14, which is a previous all-time high before the bonus or split, whatever. A lot of people think okay, 13, 14, 15 would be high. Okay. But I believe everybody is shocked with the aftermath. So the key here that I'm using is I use trailing stop when the market is really bullish. Sometimes things really get out of hand in a good way. And when we use trailing stop, it means that we move our stop loss higher and higher and higher and higher. We let the stock run, and then we see how far it can go. When it starts to turn down, we take whatever it is left. So that's also that's personally my way of doing it as a trader. And we have, I think with Philip, I have an upcoming webinar sessions that will cover a lot more about this strategy. Am I right? I think it's next week. Or the
Yes.
next, yeah. So during that one, I will share in details on the steps on, plotting the structuring the trading plan with a very step-by-step process, and also talk about the current US and Bursa market situation, which is, in a mess. Okay, but there are still great opportunities to make money inside. So that would be this one of the methods, okay, that I'm using for many years already, and this is coming from the best combination, which is the big win and small loss uh, type of behavior. Okay, so and I just want to say that behavior is something that we develop. Okay, we all know that behavior is very hard to change, so things take time. Okay, things take time. So we need to learn better strategies. Okay, if you want to take corrective action, don't force yourself to go into that strategy, like that type of behavior very quickly. It's like forcing you to be another person. So what we need to understand is step by step how this strategy can help us to shape a better behavior, and then from there we slowly back test and slowly practice, and then progress. So in that webinar, I will share more the tactics in details.
Okay. So
Yeah.
so it's a good session today. I also learned something new from you, Jin Hao. So if anyone of the audience are interested to join Jin Hao upcoming webinar, can visit our website and register for the upcoming webinar. Okay. Thank you for sharing, and I hope that it will help all the new investors out there on their trading behavior. And so now we have come to an end for today's podcast. If you have any questions or any topics you want us to discuss next week, you also can comment in the comment box below. So thank you for listening to our podcast, and happy trading for the week. Thank you for your time too, Jin Hao.
Yeah, you're welcome. Thanks for your time as well.
Okay. Thank you. Bye-bye.
Thank you. Bye.